Hello everyone, it is Sterling here from Day Trading Forex Live. It's August 19th, 2014, and today we're going to cover a trade setup that I took live in our room on August 12th, 2014. Last week, Tuesday, is when we took the trade, and it was a good trade setup that pretty much broke down immediately. It had no follow through in the direction of the setup. And the reason I want to cover it is because I get questions, do you take losses if you've identified a correct setup? And I think the obvious answer would be yes, but I still think there's some misconception there, so I wanted to cover this with an actual example of a trade that we took. So to begin, let's set this up. Basically, I choose manipulation points right about here. So these larger boxes on the chart, you'll see two types of boxes. Generally, the taller, skinnier box is the New York session, or that's what it is. The wider box is Asia. So I pick the manipulation points are right around here where my cursor is, which is midnight, 1 a.m. Eastern, right in there. Generally about an hour and a half before trading is set to begin at 2 o'clock with the Frankfurt Open. So this level was pre-selected around this time. It was 67.94, and again, I draw my manipulation points from the candle body. I don't go to the wick drawing manipulation points. That's another topic, but essentially 67.94 was a previous day's high. Not a whole lot above that was a high that once we broke above, we were going to be quite a ways away from any other stopping point, which is one of the reasons why I liked it as a potential manipulation point. And so when we pick these levels, remember that that is essentially, you can equate it to something like a hypothesis going into it. We believe there's orders sitting here because of X, Y, and Z. That's what we're doing. So when the market comes into these levels, we're not just randomly taking the entry. We have to then see our entry criteria satisfied. And the entry criteria that I use is the confirming entry. You guys hear me talk a lot about that. Put a video out about that a couple weeks back, and I've talked about it quite a bit in the past. And so I'll link to that video that walks through the confirming entry. Actually, what I did is I took a room session where we went through the confirming entry, and I took it and edited it all down to just training, and it was about an hour of every aspect of the confirming entry. So if you're serious about learning it, it's a good video that walks through quite a bit of it. So anyways, I pre-select these manipulation points for the members, and then all that's required on their end is essentially to wait for the market to come into these levels and either validate a trade or not validate the trade. And in this example, we provided a confirmation short. We created the false break, the rejection back down below, and we have criteria for quantifying whether that happened or not, which is, again, the confirming entry. And then we take the entry as it pulls back here. So this is where I was taking the entry, and this is where I was letting members know I was taking the entry, and then the market pretty well immediately stopped me out of that trade. I think it was a 12-pip loss. The good thing about our entries is that generally it's a very tight stop that we're dealing with. So we're dealing with not a wide stop going into these trades, which allows us to have an absolutely amazing risk reward. And that brings me to the second topic of this video, and that is the core goal of trading. Everybody's goal, I don't care what your belief structure is, your goal is profit. Now, that's not what most people argue on. What most people will have a difference of opinion on is the way to get to profit. And there's only 2 points in that equation. One is risk reward, and the other is win-loss ratio. So traders hyper focus to their deficit on win-loss ratio. Now, it doesn't mean win-loss ratio holds no significance in the equation of profit, because it definitely does. But I would argue that win-loss, by comparison to risk reward, is very insignificant. My belief is that most traders are brainwashed from the very beginning to hyper-focus on win-loss. When you go to those one-page sales letters, what do they tell you? This strategy wins 90% of the time. This strategy wins 99% of the time. For $37, you can have an EA that wins 96.3% of the time. So everything is hyper-focused on win-loss, win-loss. Why is that? Well, the bottom line is win-loss sells. Win-loss got you to buy that POS product that you knew you shouldn't buy. It triggered all the wrong emotions. You knew it was a scam. You still bought it because why? They pitched you a great risk reward, and that was one of many things I'm sure that tripped the psychological trigger to buy it. But the bottom line is that anything that is of that criteria is pitched with win-loss. It's never pitched with risk-reward, or very rarely is pitched with risk-reward. And if risk-reward is mentioned, it's tied in with win-loss. So I believe that what I'm going to talk about is probably the largest factor for determining somebody's success, but it's the area that most people will breeze right over and pay no attention to what I'm about to say. And again, it's the most important aspect. And that is risk reward trumps win-loss hands down in the equation of profit. To put that in perspective, if you have a trader that wins 50% of the time with a 2-to-1 risk-reward ratio versus a trader that wins 70% of the time with a 1-to-1 risk-reward ratio, not only would I argue that it's easier to win 50% of the time with a positive risk-reward around 2-to-1 as compared to winning 70% of the time with a 1-to-1 risk-reward. Again, not only would I argue that it's easier, but I would also argue that it's more profitable, and not even argue that it's more profitable. Write it down on paper and you'll see that it's more profitable to win 50% of the time with a 2-to-1 risk reward. So if that's the case, if not only is it, and again this is my belief, not only is it easier, which is my belief, but it's also factually more profitable, then why do traders hyper focus on win-loss? Well, it's because that's all they've ever known, it's all they've ever been taught. And when they look at strategies, their strategies are designed to designed and focused around win-loss. So they've never really been taught or pushed towards taking entries that are revolving around risk-reward. And that's what these entries are. We take losses. There's no doubt about it. We definitely take losses, and that's something that will continue forever. I'm never going to eliminate losses. I'm never going to win 80, 90% of the time. It just doesn't happen with the strategy. This strategy is hyper-focused on risk-reward because risk-reward creates more profitable traders than win-loss ever has or ever will. So you have to have a strategy that is designed around capitalizing on risk-reward. You can't just enter the market and say, well, I want to take 2 times my risk on this trade, and so that's what I'm going to put as my take profit and hope all goes well. You need to be entering the market where a high risk-reward scenario is possible. And that's exactly what we're doing. We're saying if we have truly identified that smart money has entered the market at this price, then we know we're not just in for a 5, 10, 15 pip run. We know we're in for a very large move for the day, possibly even the short-term trend for that day, which is going to be somewhere around the ADR as a typical move. So we know we're in for a large move, and because what we talked about earlier, which was the tight stops, because we enter with such a tight stop, that risk reward is integrated into every single entry by default. And that's the true power of the setup. That's where the strategy really gets its power from, and that's the primary core behind why it's profitable as a system as a whole. So anyways, good setup here, nice stop run at that level. Plain and simple, didn't work out. It was a beautiful trade I'll take every single time. And you know, like I said, you win. Say you win that trade 50% of the time with a 2-to-1 risk reward, you're going to be doing very well in the market. Let's flip over to another example. This is an example of a trade that, remember, I was talking about today, the pound CAD, and good job on this trade. So the reason I want to mention this trade is because this is a trade that was actually, we were talking about in the room today. So it's fresh on the mind, and it was probably, because the pound and the euro were so boring today, it was probably the most popular of the trades today between the pound CAD, and also the pound yen along right around the same point was another trade that was setting up. But we'll look at the pound CAD here. Basically, it was, again, a predetermined level. Why was it a valid point? Well, it was a major turning point in the past. And again, drawing manipulation points off the candle body, not the candle wick. That's a whole other subject we're not going to get into this video. But in this scenario, what do we wait for? Well, we wait for a standard confirmation. And how does that confirmation come about? Market comes into the low, creates over a 3-pip break, then finally confirms to the upside, and then the next candle provides the pullback, which is what allows for such a great entry point. Now, in this case, it pulled back to within 8 pips of the low. If you cherry pick the low, well, then a 12, 13 pip stop would have got you a few pips below the low plus the spread, which would have left you with a very tight stop loss. Even if you took a pullback on just a few pip pullback there, you managed to take a trade with a 15 pip stop, which is definitely possible on this pullback. That was probably the common entry was around 38, so that would be, yeah, it's roughly 11 pips from the low. So 15, 16 pip stop was the average, at least for the room here today. And what's the true power of this setup? Well, the true power of this setup, again, is not the fact that it produced a profitable trade, because, you know, the key to profit is not in the win-loss ratio. The key to profit is in the risk-reward associated with this trade. If you took a trade with a 16 pip, say a 15 pip stop, just for easier figures here, a standard 40 pip take profit is what we use. You're looking at a risk reward of 2.6 to 1 on that trade. Now, with an entry of, or with a risk reward of 2.6 to 1, you can win 35% of the time and still be making money. That's an extreme example, but it illustrates the importance of risk reward. So are we going to win every trade? No, definitely not. We are never going to win all of our trades, and quite frankly, if I win between 60 and 65% of the time, I am as happy as I'll ever be with my win-loss ratio. Because the real power of this setup is never going to be in win-loss. The real power of this setup is always going to be in the risk-reward associated with picking smart money turning points. So I hope this video helps, guys. Stay focused. That's the key. The key is, number one, pick good manipulation points. And number two, have a solid foundation for how you quantify an entry once it gets to those manipulation points. I use the confirming entry as my preferred entry technique. And the reason I do that is because it's a good compromise between aggressive entry and being conservative enough to get you into the trade while not being too conservative to get you into the trade too late. Still allow for that risk reward, quality risk reward. So again, I hope the video helped. I hope you enjoyed the couple examples. And as always, if you have any questions, feel free to shoot us an email. We will be happy to get back with you. Until next time, happy trading.